Had a little August mini flurry of M&A activity this week. Some of it looks like good deals, some less good. Some of it is a glimmer of hope for M&A bankers, but really, when you look closer, Anthony, not so great. You were looking particularly at this M&T bank.
Yeah, so it's New York-based bank. It's based up in Buffalo, actually. Bought a rival down in New Jersey, Hudson City Bancorp, for $3.7 billion.
Seems like the perfect deal. Right?
Actually, so many things look right for both sets of shareholders. Hudson City's been having problems. It's basically its funding costs more than it's getting on return on its assets. It's got really bad returns at the moment, like a lot of banks. But this is the kind of deal we're expected to see, where a stronger-looking player would come in and buy up a weak one.
It's kind of good for everybody in almost every way.
Yeah, the shareholders of Hudson City get a 9% premium. The shareholders of M&T are buying it at a discount to tangible book. It'll immediately increase their EPS once the deal closes, their earnings and everything. Capital looks good. Everything. It's actually a pretty good deal, unless you're a banker.
I mean, the interesting thing
in this
situation is that M&T, which is the buyer in a fairly sizable transaction, and M&T is not an investment bank by any stretch, didn't use any investment bankers except Evercore to give it a fairness opinion, which is
you bring him in over the weekend to get it done. You give him a little bit of money.
It's not a big fee.
No, and of course the CEO Bob Wilmers is someone who for years has eschewed the whole idea of using Wall Street too much in his shareholder letters, especially this year. He's calling them out for investing in the wrong way, for thinking too short term.
So
and he does a lot of deals too.
Yeah,
he's practicing what
he's done 23 deals in 25 years, and he said on the conference call yesterday, I used the 13 guys and women I've used in every single deal for the last 25 years.
So we had another deal yesterday.
But
this one's been going on forever. These bankers must be so happy that maybe it's finally done.
Well, look, I mean, it looks on its face like a good deal. It was a fight.
This is Hertz.
Dollar Thrifty, one of the smaller, biggish, car rental companies, sells out to Hertz. Looks like kind of a great deal for bankers. There were multiple parties interested. Avis was at one point involved. The bidding started back at $40. Now it ended up going closer to $90.
Well, the first offer was April 2010. There's been rumours of this happening for years. I think Hertz even made a $2 offer way back in the crisis.
Yeah, Dollar Thrifty was pretty way down in the dumps. But I mean, so a deal that takes 3 years essentially from the start of the rumors.
And how many banks?
Six banks advising
it's
on
not
it.
A
so
lot
you're
to
carving
share,
up a pool. And the fact of the matter is the deal isn't even done yet. There may be some antitrust problems. You may have another bidder come in. Nobody's getting paid.
Let's assume the average fee is 3% for an M&A deal. That's $70 million they're going to share between 6 of them, and that doesn't even. That's before you.
There's some financing.
That's before you.
Yeah,
there's some financing stuff. But that's before you include the lawyers as well.
But the point is, I mean, and then you also had another deal. You had this IBM deal.
Right.
IBM bought a software company at $1.3 billion in a very unusual move. Not only did they not list any advisors on the press release, but when asked, both companies refused to say anything about whether they were using bankers,
just the oddest thing.
which bankers they might be using.
Yeah,
so no credit out there at all for investment banks. So this little mini flurry really is sort of a damp squib at this point for bankers.
Okay, we'll leave it there. We'll be keeping an eye out for more action that might give bankers a little more hope when they get back from their summer holidays, and we'll have more breaking views tomorrow.